Hey, aloha everybody, it's Marc Dixon from your local Allstate agency right here in Hawaii. Now, welcome back to another episode of Insurance Made Simple. Now, today we're talking about something that can get a little confusing, so maybe not that simple to start, and that is what happens to your insurance when you improve your home or your condo. So maybe you remodeled your kitchen, maybe you added a bathroom, maybe you enclosed your lanai, you built an addition, upgraded your flooring, or installed a beautiful new set of cabinets. And you might be thinking, hey Mark, it's my house. Why do I need to tell my insurance agent? Well, because your insurance policy needs to keep up with the home that you're actually living in or the condo that you're living in. So let's start with a single family homeowner. Now let's say you bought your home and your kitchen originally had basic cabinets, laminate countertops, and appliances that were perfectly functional, but definitely weren't winning any design awards. Right? Then you decide it's time. So you remodel the kitchen, you put up new cabinets, change countertops over to granite countertops, new appliances, add an island big enough to host Thanksgiving dinner, and still have room for everyone to argue about the gravy. Now that's a significant improvement, and you've potentially increased the cost to rebuild your home. So tell your insurance agent. Now, why does that matter? Well, your homeowner's insurance is designed to provide coverage based on your policy and the characteristics of your home. And if you make a major addition or improvement, the amount of insurance you need may change. Another example, you add a 500 square foot addition. Now your home is now bigger and more expensive to rebuild. But if your insurance company still has the old information, you could potentially have a coverage issue, especially if there's a major loss or a total destruction. And that's why when you improve the home, you update the insurance. Now this is especially important here in Hawaii, where construction costs here can be very different from what you might see on the US mainland. Right? We have transportation costs here added in. We have additional labor costs. We have materials coming across the ocean. And of course, that little thing called island life, which seems to affect all pricing. Now, you don't want to discover that after a major loss, that the cost to rebuild your upgraded home is much higher than you expected. Now, let's talk about condos. And this is where things get a little bit more complicated. Now, if you own a condo, you generally have 2 insurance policies involved. 2, not 4. Now you have the AOAO or HOA master policy, and then you have your own personal condo policy, usually an HO6. The association's master policy covers the building and common areas, but exactly where that coverage stops depends on the association's governing documents and the master policy. Now Hawaii's law specifically says the association's insurance does not necessarily have to cover improvements and betterments installed by unit owners. And this is where the condo owners really need to pay attention. So what are improvements and betterments? Well, think about it this way. When the condo was originally built, maybe it had basic carpet, but you decided, nope, no shag for me. I'm going with the beautiful hardwood flooring or some new vinyl laminate. And maybe the original kitchen had basic cabinets, but you installed custom cabinetry, quartz countertops, and a refrigerator that costs more than my first car. Now, those upgrades can be considered improvements and betterments, and the Hawaii Department of Commerce and Consumer Affairs explains that an HO6 policy can cover the building additions and alterations, while the association's policy only covers the as-built condition when it was first built. So here's a simple example. Imagine your condo originally had $10,000 worth of flooring and cabinets, and you renovated, and all those improvements would cost $50,000 to replace. Well, then there's a major covered loss. The association's policy may be responsible for restoring the property to the condition it was originally built or conveyed, depending on the association's coverage. Your HO6 policy would need to cover the difference for your upgrades and betterments. And that's why your personal condo policy needs to know about those improvements. And here's something else. Now, don't assume that because your HOA has insurance, that you don't need your own insurance policy. The association's policy is not a substitute for your personal HO6 coverage. Your own policy can provide coverage for things such as your personal property, provide liability protection, give you loss of use, and potentially your improvements and betterments, depending on your policy and the association's responsibilities. So think of the 2 policies like puzzle pieces. The goal is for those pieces to fit together, not for everyone to discover after a loss that there's a giant piece of the puzzle missing. So what should you do? Well, if you're planning a major renovation, call your insurance agent before the project starts. Tell your agency what you're doing. Are you adding square footage? Tell us. Remodeling the kitchen? Tell us what you're doing. Adding a bathroom? Let us know what you're adding on. Now, if you're replacing all the flooring, you can let us know what you're replacing it with. Installing expensive built-in cabinets, we want to know about that too. Adding photovoltaic panels or a solar water heating system, definitely tell us about those. And if you're buying a condo, ask your agent and your HOA for information about the association's master policy and your responsibility as the unit owner. You want to understand where their coverage ends and where yours begins. One more important point. Not every improvement automatically means your insurance premium is going to go up. Now, some improvements can actually make your home safer or reduce risk. So this is not for all companies, but things like a newer roof, updated electrical, updated plumbing, or approved wind mitigation improvements may potentially help with insurance pricing or eligibility depending on the company and policy. So don't avoid telling your agent because you're afraid that means Mark's going to raise my cost. Right? We don't sit around the office waiting for someone to install new countertops so we can celebrate with a premium increase and charge you more. That's not how all of this works. We want your policy to accurately reflect your home. So here's the bottom line. If you renovate, remodel, add on, or significantly improve your home or condo, tell your insurance agent. For homeowners, these improvements can increase the cost to rebuild your home. For condo owners, you also need to understand the relationship between your personal HO6 policy and the AOAO or HOA master policy. And most importantly, don't wait until after a loss to figure out who is responsible for what. That's like waiting until your car breaks down to figure out where the hood release is. Now, if you've recently remodeled or you're planning a renovation or you're just not sure whether your current policy reflects what you've done to your home, give us a call at the office. Right? We'll be happy to review your policy and help make sure your coverage keeps up with the house or condo that you're living in. Now, if you found this video helpful, please like the video, share it with a friend, and subscribe to the channel. That way you can get more episodes of Insurance Made Simple dropping every week. Now, I'm Marc Dixon, your local Hawaii insurance agent. Stay safe, live aloha, and have a mayhem-free day. And I'll see you in the next video next week. Aloha.